Robertson, thank you so much for that fantastic introduction. And can I just start by offering my commiserations about the football? That being defeated by the Tunisians is just, the North African thing. As an Arsenal fan, I share your pain. So I've seen a lot of disappointment in recent years as well. If you'll excuse me, I'm going to go through a set of slides because that's my comfort blanket and it's the way I remember what I'm going to say. And hopefully some of them will help kind of explain more simply than just my words where we're at. So if we start just with COVID, because it's been an issue, where's Africa sitting in terms of growth? And here I've got Sub-Sahara in light green, and you're seeing the GDP shifts. And 2008, 9, 10, Sub-Sahara did really well, better than the world in 2009, almost everywhere. And again, in 2020, which is when all the countries where all the regions are falling, you're seeing Sub-Sahara do better than almost everybody. The recovery is a bit slower because you weren't hit as badly in 2020, and that's good news. And I think that's connected to the fact that COVID itself didn't hit countries as badly in Sub-Sahara. And we kind of guessed this was going to be the case once we had that Chinese data back in, I think it's February 2020, that said it really hits the elderly worse. And in the UK, something like 12% of all deaths in the 2020-2021 period, over 2 years, 12% was because of COVID. But according to the official figures in Cote d'Ivoire, 0%. Nigeria is 0%. Congo is 0%. So it's COVID hit countries that were younger much less, and thankfully for the populations that's the case. And I'm showing that there's a good way of showing that is when we look at the median age. You can look at the average in two different ways, the mean or the median. In terms of the median age, the average age in Nigeria is 16 years old on the left-hand side. And that's a key reason why COVID didn't hit too badly. But I'm going to come back to this a bit later because it answers your question that you just asked about Egypt. How did Egypt get $400 billion to spend in the last few years? And I would argue it's because Egypt's an older country. It's saved more money as a result. And the oldest countries tend to have the highest savings. So we're going to come back to that issue because it's crucial for understanding some of the challenges in Nigeria. Right, 2 or 3 months ago, we put out a report called Sparkling Markets. Everything was looking great, but I said there's a couple of grenades that looked like they could go off. And the two grenades that were most obvious were the global inflation story and the China recession risk story. Now, the China recession risk is really, it's there. This is a graph of the bond, the Evergrande, the biggest real estate company in China. China, the second biggest economy in the world, but the economy that's produced more growth than any other for most of the last 15 years, China. And this is a huge part of that economy is real estate. And the price of that bond has collapsed from something like 85 cents on the dollar to now about 16 cents on the dollar. And this is pretty shocking because if Chinese real estate goes wrong, then Chinese demand for cement and for copper, for the wiring and the housing, all of that goes wrong as well. And the hit isn't, in my opinion, a real estate problem like we saw in America in 2007 and 8, which leads to a financial crisis. The risk here is that a real estate problem in China leads to a commodity hit. The good news is that while I'm sitting there and watching this happen, it looks like the Chinese authorities have this under sufficient control. It looks like this isn't impacting growth too badly. And even my fears a month or two ago that Omicron might suddenly sweep China, and I really did worry about this in December, so far has not been happening. They're getting 50 cases a day. I think we do that many in about a minute in the UK. So China's actually, despite this graph, looking good. So that recession risk that concern for markets doesn't really seem to be there. The bigger problem is the inflation, the Fed hiking rates in March, and we're seeing this jumping up of US yields. That's the green line there. Quite significant shift up. And we've raised our forecast for where we think US 10-year treasuries are going to be. A couple of years ago, for 2 years now, we've been saying 0 to 2% for the next 10 years. But a month ago, 2 weeks ago, we said, okay, 0.5 to 2.5. And my worry is that we're going to see those yields heading higher. I'm still hoping that 2.5 is as bad as it gets, and maybe we don't even cross 2%. But we have seen an impact on Africa, and not just Africa. We've seen Eurobonds, the pricing of Eurobonds issued by Ghana in blue, if you can see that on the bottom of this chart, Egypt in white, Nigeria in green. These bonds getting hit, prices going down. People don't want African debt or Pakistan's debt or Sri Lanka's debt. In fact, they don't want bonds as much as they did just a month or two ago. And that's certainly a destabilizing factor. But where's this inflation coming from? The inflation is coming from, in part, this resurgence in oil prices. And this is a graph looking back over the last, well, fact, since 1970. And we're nowhere near the highs that we've seen before. But the pickup in oil prices is a big deal, obviously, for Nigeria. Now, just in terms of how much does it help Nigeria's exports? I did a comparison on this graph looking at Botswana, which is the gray line, and pointing out that Botswana makes about $2,500, $2,000, sometimes $3,000 per person a year from diamond exports. They got a lot of diamonds, not very many people. A country like Nigeria, yes, it's got a fair amount of oil, but not when it's divided by over 200 million people. So to be as rich as Botswana, we'd need to see the oil price at $400 a barrel, not 88 as it is this morning, for Nigeria to be getting as much money from commodities. So we're obviously not, we're not going to expect to see that. And you've probably seen this chart I've presented a few times before, lots of times over the last 10 years, looking at oil exports per capita. And on the left-hand side, it's the Gulf countries selling 500 barrels per 1,000 people every day. And on the right-hand side, Nigeria sells 7. So I keep on pointing out that oil isn't going to make Nigeria rich, but nonetheless, when the oil price goes up, as much as it's gone up in the last few months, it's forcing us to change our forecasts in a more positive way for the country. So this was our forecast just a couple of months ago for Nigeria. We thought growth, top right-hand corner, in 2022 was going to be 2.8%. We thought inflation was going to be something like 12. We thought interest rates might have to go up. And we thought the currency was going to end the year, it's the bottom right-hand corner, we thought it was going to end the year at 482 to the dollar. Considerably cheaper naira with all of the challenges that we've heard about for the budget. But today, I can show you our new numbers, because we're a baseline assumption now is oil prices are going to average $80 this year and next. Now, I don't know if that's going to be true. I have yet to meet the oil genius who always calls the oil price right. But the $80 means that at least we're going to get growth of about 3%, we think, in Nigeria this year. And if it stays at $90 oil, because this is what this slightly complicated scenario table is showing you, we think we're getting growth of 4%. The currency, maybe 465 this year. And with oil at 90, possibly 450 this year. Interest rates coming down. And the most important of all, the current account going into a very healthy surplus. So dollars will be flowing into Nigeria from this current account surplus. So this is a big deal. On the currency itself, it's a constant source of, well, I was going to say confusion or risk of confusion, but actually sometimes it confuses even us. But we've got 2 different models for all currencies. And one is done by Yvonne Mahango, our Africa economist in Johannesburg. And her number for Nigeria says that fair value is about 470 to the dollar. We've got a much longer dated model in London for more countries, emerging markets as well. That says 565 is the right exchange rate for Nigeria, which is pretty close to where I think the parallel rate is this week. But of the two models right now, I wouldn't trust mine. I would trust Yvonne's, because Yvonne's is over a period since 2004 when oil's been over $80, which is where we are now. In fact, with oil at $90, I'd argue you should be a bit stronger than that 470. And that is what we're forecasting, something like 460, 450 for the end of this year. And arguably could be even a little bit stronger than that. So the currency story's changed a lot compared to just 3 months ago, 2 months ago, with oil at 60, which was fits better with my model of 565. So there's a big shift here on the currency side, which I think is important. Long run, we still think the currencies has to go weaker, because if inflation in Nigeria is much higher than in America, the currency has to move in the long run to capture that. So this is showing that in 2030, the Naira could be 1,000 to the dollar. But it all depends on what we see out of inflation in Nigeria. If we've got very low inflation, if inflation in Nigeria was 3% a year, every year, until 2030, in fact, the currency then could be 430 to the dollar in 10 years, 8 years, not 1,000. So it really does depend on what happens with policy in Nigeria. And this then gets people like me focusing on next year's elections. Now, we've all been through a number of elections in a number of countries in some cases. What do we know? Firstly, sometimes businesses get a little bit concerned about what's going to happen, and they might decide to delay investment plans. But on the other hand, we've got this higher oil price, and so we've got we've got the government doing its bit to support investment. So that's a mixed picture. Do I have to worry about election kind of risk? Certainly, foreigners will talk about this. And we've seen a lot of coups in West Africa recently. Is this the sort of thing we should worry about? Not according to our data. Our data says Nigeria is, surprisingly to some people, a very secure democracy. 95% chance a year, which is way higher than most others in the region. What about policy? What happens next year? And the market, I think, is looking for market-friendly policies from 2023 and from the new president. What are the challenges? We've talked about them: high debt, low revenues. I'll come back to that. Hopefully, oil prices stay at the 80 we're looking for, or even go higher, in which case Nigeria is going to be definitely easier position. And then I'd just like to talk about 2 or 3 things which I would hope that a president can focus on, because I think they make the biggest difference in the long run, and will make Nigeria more successful. I mean, I'm just showing you a quick map here. I need to update it. This is trying to look at democracy in orange versus autocracy in purple. And you can see Nigeria is sitting there very significant. I'd have to change the colors for quite a few countries after the events of recent months. And I'm going to show you a different map and explain, I think, why we've seen coups in some countries. This map is looking at adult literacy, the ability to speak, to read and write about 4 lines in any language. Lines like farming is hard work in any language. When over half of adults can't do that, you're colored gray on this map. Places like Mali had a coup last year. Guinea had a coup very recently. Burkina Faso is a little bit better. Their adult literacy is about 40 to 59%. So it's roughly half the population. But that's still not a great number. And we had a coup there too. And we nearly had a coup in Guinea-Bissau. just earlier this week. When adult literacy is below 40% in grey, you get the civil war, instability of Somalia on the right-hand side. And this isn't a problem just for countries. It can also be a problem for regions or states. And we certainly see it in northern Nigeria. These education numbers are telling me that the insecurity issues that we see in some states, the root cause is to do with education. So it'd be lovely to see a president come in and try and make a real big difference on this, because what you're looking for is to get to the high literacy rates you see in southern Nigeria. Lagos is amazing on this. Morocco is 70 to 80% literacy. And when you've got it that high in light green, you can industrialize. Then your economy grows at 7, 8% a year when everything else falls in line too. What else do you need to fall in line? You need electricity. The grey are the countries where there's not enough electricity to industrialize. And that's a problem for quite a number of countries in sub-Sahara. So it'd be great to have a president. Jonathan did in 2011, he promised power to the people. It would be great to see a president who was able to deliver on that promise. So the education numbers certainly key, the electricity numbers certainly key. And there's an underlying problem which I've been trying to wrestle with, is why is there a shortage of cash? Why do I hear that the companies say they can't get credit? And it's to do, oddly, unsurprisingly, surprisingly to me, to do with fertility rates. That when countries have low fertility, they have high savings. Countries like Morocco, actually South Africa, Tunisia, have a lot of savings. And countries where the fertility rate's high, where we have a lot of kids, very few savings. And that's Nigeria, Angola, Congo. And I show that by looking at the kind of the size of the banking system. And the banking system in Angola or Nigeria, deposits in the banking system is about 20% of GDP. In Bangladesh, it's about 60%. Now, Bangladesh is really interesting because Bangladesh was the same population size as Nigeria about 15 years ago. And now Nigeria is way bigger in population terms, but much less successful on the growth front than Bangladesh. And it's because Bangladesh has got money in its banking system and it's connected to this fertility issue. So banks in Mauritius or Morocco have loads of deposits because people have savings, because the fertility rate's low. And they can lend and you get great infrastructure. Egypt, the numbers are better than Nigeria, as we heard 10 minutes ago. Nigeria, though, the banking system, it's about 20% of GDP. And it's very common among the high fertility countries to have that, but it just means the banks don't have all the cash that the country needs to invest. So it becomes very profitable to invest in the banks. Some of you probably own shares in some of the Nigerian banks because the return on equity could be very good. Because if you have any money at all, it makes you very, it means you do well. It's just most people haven't got as much access to cash as they'd like because it's expensive. It's expensive in high fertility countries. So countries like Angola and Egypt and Nigeria and Kenya, the cost of borrowing is high. It's because there isn't much cash around. Where's the cost of borrowing really low? Yes, it's in Asia, like China on the left-hand side here, but also Morocco and Mauritius. Now, the United Nations tells me that they're forecasting that this fertility rate which is what, 5.5, nearly 5 to 5.5 in Nigeria today, is still going to be over 3 kids per woman, even in 30 years' time. And that means the savings challenge is going to be the same in 20 or 30 years' time, slightly better, but not much. I was listening to a conference yesterday that Business Day organized in Lagos, and there was a guy there saying 40 years ago when he was studying at university, the challenges were the same in Nigeria then as they are now. And I don't want that to be the case. And hopefully a new president can make a difference. And you can make a difference. The biggest driver, it seems, of fertility rates is infant mortality. when there's a high infant mortality rate, people have a lot of kids, and Nigeria's up in the top right-hand corner of this, and you want to be heading towards the bottom left-hand corner. And this isn't just about spending money. So Nigeria's mortality rate for under fives is over 100 per 1,000 kids. Venezuela on the left-hand side, same wealth level as Nigeria, but it's more like 30 kids. Ghana is half the Nigerian level, but they're the same wealth level as Nigeria. So it doesn't feel like this is hugely expensive to resolve the problem. It's not just about money, it's about using that money well. So hopefully a government can make a big difference, because when do continents take off? Continents take off when the ratio of kids, which is blue on these two graphs, goes down. So Asia was all sorts of challenges in the 60s and the 70s, war, conflicts, poverty. The ratio of kids starts to fall, the number of adults starts to pick up. And right now, over 2/3 of people in Asia are adults. And that's great because they're out working and so on. In across Africa, it's still roughly 50-50. So half the population can't work. Well, the kids can do a little bit of work, although trying to persuade my kids to even do the washing up is a challenge. So it depends how lucky you are. So what I'm showing you here then is turning that into growth numbers. And the figures along the bottom is what's the ratio of adults to kids. If it's about 1, as Nigeria is, about 1 to 1.2, then per capita GDP growth is about 1.5%, 1.4 to 1.7. But when you've got the ratio of adults being double the number of kids, like Asia's got, you're up there at 2, 2.5 along the bottom scale, then your per capita GDP growth starts to grow at 3, 4, 5%. Nigeria will take off, and in a huge way, with these increasingly better educated people when the fertility rate comes down. So this is a rough graph showing why emerging markets are so attractive. They've basically been looking good since the 90s on this in green, and they're going to continue to be good for decades. Nigeria hasn't yet had the full benefit. It isn't there yet to get the full benefit, but it's certainly something we hope a government does something about. Short term, though, I'm going to try and finish off the next 2 or 3 minutes. Short term, what have we seen? We've seen, firstly, this rise in debt. Everybody's gone out and borrowed more dollar bonds because savings have been a little bit short at home. It's not turned into the export growth. It's really essential that when countries borrow dollars from abroad, they invest in something which will produce dollars for export, so you can repay the dollar debt. And in Asia, we see that, places like Vietnam. Across Africa, it's been just that the numbers are getting a bit more worrying. Nigeria is looking good on this, on the right-hand side. We're still far away from problems. That's why Nigerian Eurobond prices are higher than in Egypt or Ghana, say. But overall debt to revenues, to come back to this issue, that's a problem. That really is a problem, and we do need to see the revenues growth. DG is absolutely spot on, as I'm very pleased to see, an official who understands the issue so well and is so focused on it. It's because Ghana, in the top on the left-hand side, is facing a problem on this, and you see that the Eurobond prices are telling you that as well. Ethiopia is defaulting; it's restructuring its debt. Zambia is defaulted, and the fourth in line on that chart on the left is Nigeria. So this is a challenge for the next president. I'm going to skip past this in the interest of keeping this short, but this incredibly complicated graph, is basically telling you there's a solution that a country can find if it's got a small banking system, because it's currently got a high fertility rate. And that solution is to run a current account surplus. If you run a deficit, your interest rates are really high. And if your interest rates are really high, you don't grow very fast. You don't invest very much. And it becomes harder and harder to get the growth. But if you've got a current account surplus, the dollars are coming in. Interest rates can be even slightly negative, according to that table in the top right-hand side. So this is really helpful that the oil price now is going to give Nigeria a current account surplus, because it's going to help on the interest rate side. And then when I bring this back to what does this mean for the stock market? Well, the stock market actually looks really quite interesting. On the left-hand side, you've got one of the cheapest markets. Pakistan's slightly cheaper. They've got debt problems too. Mauritius is actually pretty cheap, but the tourism hit, you can imagine. Jordan's got debt problems. Nigeria is looking one of the cheapest next markets on a PE ratio, and with a great dividend yield. To be getting 8% in dividends in local currency it's attractive for investors. Foreign investors are still going to be concerned by the exchange rate obstacle of getting in and out. But if that gets better because of oil, they could come back and help support the market too. So that I'm going to end the slideshow and stop sharing at this point. Did I even actually share? I don't know. Stop share. So I did share. Thank God. Overall, big picture is it's looking better for Nigeria now. Growth 3 to 4%. A currency that looks like it can sustain a considerably stronger rate than I feared 2 or 3 months ago when oil was at 60, 65. Yes, it means a bit of weakness from here, but we've got a market which is attractively priced, and I could understand why investors will choose. Local investors certainly would be choosing the equity market as one of the places to go. And long run, countries can't just rely on debt to find the investment for growth. Equity is by far the safer way for Nigeria to be raising money to support investment and growth. So I very much want to see the NGX be as successful as it hopes to be in the next few years, trying to boost its role and what it can do for Nigeria. So I will stop there. Thank you very much.